Welcome back, Alpha Hunters. Hope everybody's having a very tubular Tuesday. Hopefully you're having a good day. Other than that, see how the market's doing. All right, got a very nice subtle gap down here. About a 1/4% here, a little bit more than a 1/4% gap down on the SPY. All right, nice trading higher. Kind of hung out there for, I guess, most of the first hour of the day, really, or hour and 15 minutes or so. And then, yep, see the breakdown. Breakdown, pause for a bit, broke down again. Then kind of based and kind of been a little bit upward trajectory here over the past 45 minutes. So, tomorrow's going to be a big day. We got Fed Day. Didn't even realize it was already Fed Day again coming into the week. But yeah, here we go. Fed Day again, May 1st. So we'll take a look, see what interest rates are expected to be for different points throughout the year, and get a understanding of what the expectation is, and really, kind of the expectation of going into tomorrow. Last Fed Day back in mid-April or mid-March, I kind of expected the Fed to take a little bit more of a hawkish stance. Okay, so to come out and say basically, hey, we don't think we're going to do all the rate cuts, like we had said before, like the 3 rate cuts that they had said back in December. I think we had talked about that coming out of that meeting. That I was shocked that they didn't mention that they were going to take those off the table at all. Mostly because we had already started getting inflation data that was starting to creep back up, and now, well, we've continued to get inflation data to creep back up. I would fully expect the Fed to come out tomorrow and take at least all the rate cuts off for this year. And I think they would probably leave it at that. They might, if you might see some real bearishness come in, if he makes commentary around, if we see continued increase in inflation, we will go back to raising rates. But I don't think that is going to be their plan. I don't think that's what they are going to look for. I think what they're going to say is like, hey, well, I think we're gonna stay at our current spot for now. We'll continue to monitor things, but we have no plans to kind of cut rates. So that's kind of what I would expect to hear. Kind of expected to hear that last time, but they didn't make any change as they're going forward. So I'd expect to hear more of that change this time. But if they do start to sound a little bit more hawkish, I don't think the market's going to take that very well, right? So we'll see. We'll see. It's kind of hard to tell what the Fed's going to give us, because they didn't really do that last time. And a lot of people thought that they were going to take a little bit more of that tone last time, anyways. But if they come out this time and say, hey, all the cuts are off the table for probably this year, maybe go back to raising rates if inflation goes higher, that would probably send the market probably south, I would imagine, pretty quick, because the market hasn't been pricing that way at all. All right, let's just keep it rolling though. Q's, nice gap down, traded sideways there for first hour. Very much looks like the SPY. All right, see if we can base and run higher towards the end of the day today. Nice gap down here on the IWM. All right. IWM currently down 1/3%, but did gap down about 0.9%. All right. Quite a bit of that gap down was the move for the day. But yeah, there you go. IWM got a nice little gap down there. SPY currently down 0.7%. Q's currently down 0.9%. IWM currently down 1/3%. The DIA gap down, chopped sideways, kind of rolled over. It's also trying to base run up here. Currently down 0.8%. RSP currently down 0.8%. It also had this gap down, chopped sideways, rolled over sideways, broke down. It's trying to base and push higher. Okay. So we're going to take a look at the monthly charts. We'll see kind of how that looks, since we got the end of April today. See if they can kind of tell us anything. RSP, yeah, pulling back some. DIA, potential Morningstar reversal pattern here. RSP not quite as obvious. Also, also here on the IWM, this is a, check this out, island reversal pattern right here on the IWM. Yeah, we gapped up, dojied on yesterday on Monday, and then gapped down, and I mean, it's not perfectly clean. We've had a little bit of overlapping on the wicks over the past week, but yeah, that does look interesting. So I'll be curious to see if we actually do close below 197 today on the IWM, because this would also be a Morningstar reversal over the past 3 trading days with an island reversal also in that as well. Qs, that would be also interesting if they close at the session lows, basically back down to kind of where the lows are for the day. Because that looks like that would be a Morningstar reversal. Wow. This looks like it would also be a Morningstar reversal here on the SPY. So yeah, we did get a little bit more of that push. I kind of thought we might have early this week, but we got it really quick yesterday as we kind of gapped up to some levels yesterday, and those were some pretty decent spots to see some bearishness come in. That's kind of why I was mentioning that. We'll see if it plays out and continues down. Obviously, tomorrow's going to be the big day. If the Fed comes out tomorrow and they're kind of dovish and say, hey, you know what? We could still see 2 rate cuts happening this year. I think the market would really like to hear that, honestly. I really think the market would love to hear that. Take a look at the monthly here on the SPY. Let's see. How do I, nope. Oh my gosh, they've moved all this stuff around. Okay, so here's the look at the monthly. So we do have a little bit of an engulfing pattern here in the SPY. It doesn't really mean a whole lot. Maybe it does. We had an engulfing back here when we started the bearishness back in 2000, back in 22. So yeah, we'll see. Qs don't look like they'll form this evening star on a monthly, morning star. Evening star on a monthly. IWM, it could just be pulling back. Obviously, we got a lot of these highs in here, so could just be pulling back. I wouldn't be surprised if it does pull back down even some more. The DIA kind of makes sense to pull back down to here, at least, or so around the 366 area, kind of these highs, below 370. So maybe we would see some bearishness continue to come in. And then you got the RSP here, false breakout, right? False breakout here, breaking higher last month, this month coming back down, bearish engulfing, false breakout, kind of look to it. So yeah, there you go. You can see that previous all-time high level. DIA, yeah, obviously it's above its previous all-time high. And you know, if you looked at this, I guess if you looked at the Qs and the SPY on a quarterly chart, right? Here's a quarterly chart. So obviously last quarter, Q1, we broke above. So what happens if this quarter we come and get back down below this 22, the end of 21, beginning of 22 all-time high levels, and we come back down? I mean, that would be a false breakout. I mean, people don't look at the monthly or the quarterly charts like ever. But I mean, it would be that. Yeah, I mean, that could happen. It could happen. That is definitely not one I would want to be playing on a daily, right? If you're talking about quarterly time frames, I mean, you're talking a lot more long term type positioning there. So, all right, we'll see kind of how things shape up here over the next quarter and month and stuff like that. But yeah, I'd be interested to see how we close today if we have a lot of those bearish type situations of the evening star reversal patterns kind of form out, and some of those island reversals like the IWM had. Yeah, I'd be interested to see how that looks today at the end of the day, and how it'll look tomorrow at the end of day after we get Fed day. The VIX, a little bit higher move here on the VIX. Kind of makes sense. I mean, we are down, and we also have, a pretty big catalyst day tomorrow, Fed day. So probably getting some people protecting positions. Dollar has rebounded. Look at that move. Look at that move that we had on Friday. You know, we talked about that, but that move yesterday, that had to. That would have been scaring me if I was like, okay, I like the move on Friday. This looks very strong. And then you get this move on Monday, and it's like, oh my gosh, maybe that was just a false breakout on or Friday. Maybe that was just a false pump. But today, I think, kind of cleans up that notion. Let me get this because we got this flag pattern, right? And now we've made higher lows over the past, at least past 2 days from Friday. So we're definitely turning higher, making higher highs, that kind of stuff. That looks pretty good. Today's candle really kind of helps the DXY to say, hey, this thing looks like it's going to go bullish. I'd be probably hopping on that train pretty soon. Gold, it's all gold this morning. The GLD Gold Trust here. Yeah, I think we'll get a little bit more of a steeper pullback here. Obviously, the way the DXY look, and we'll take a look at yields here in a sec. But the way the DXY looks like they're just going to be pushing higher. They have been running bullish together here over the past couple months. That doesn't typically normally happen. So maybe we'll see the gold actually rest. If that does happen, I think this will be a great dip buying opportunity. Somewhere down here around the 50 EMA to these previous highs. So like 207 to like 203, somewhere in there. I would be just dip buying all in there. Just all in there. Yeah, the 100's even down here below 200. So the 100 SMA is below the price of 200. Let me clarify that. So yeah, there you go. Take a look at gold. Okay, yields though. All right, yields bouncing back. Got a little bit of a bullish engulfing. If we do this little uptrend chop action, that would be pretty strong to continue higher later on. We'll find out a lot of things, especially on dollar and yields tomorrow. So it's gonna be kind of hard to really say anything today, just because tomorrow's such a major catalyst for those areas of the market. 10-2 inversion, bouncing a little bit today, just kind of hanging out. All right. Yeah, HYG bonds should be down. I mean, yields are up pretty good. HYG though came right into these lows, kind of like it got a little bit of higher than the high of last week, but it wasn't breaking these lows yet. It wasn't breaking these lows over the previous couple months. Still want to be bearish in that area. So LQD, yeah, gap down, hasn't really done too much during the day though. LQD also kind of TLT also kind of down today. Okay. All right, take a look at that sector performance for the day. We got healthcare looking really good. Nice gap up here on healthcare. I mean, most of everything else looks like a gap down. Healthcare gapped up and at least it's held somewhat flat. Slightly positive. Utilities got bought up, especially mid-morning there. Looks like it got bought up pretty good. So utilities, healthcare doing pretty good. Staples also doing somewhat well. Financials also outperforming. And then all the days underperformers, real estate, tech, communications, industrials, materials, discretionaries, and energies. Energies at the low end of the day. All right. Intraday. See, utilities have done very well, especially since that mid-morning kind of run there. Real estate, staples, financials, healthcare, all kind of outperforming there. Materials, communications, doing pretty good. Discretionaries are in line with the market. Tech, underperforming. Industrials and energies. All right, yeah, take a look at crude oil here. Yeah, you can see that we definitely had this evening star reversal pattern between Thursday, Friday, and Monday. We continued down today. If we break that low, basically from last week, the last week's low, then yeah, probably just looking forward to coming back down to at least 78 area. At least the 78 area. Got a nice little high back over here in late January. Nice little cluster here. There in mid-February. So, okay. What about gasoline? Gasoline. Nice little drop today here on gasoline. Okay. Heating oil. Yeah, heating oil dropped off. Oh, contract roll here on heating oil. And take a look here at the Fed Watch tool. May expect a rate hold. I mean, yep, there you go. Remember, coming into the year, we were already expected to have two rate cuts by now. And then June looks like a 90% chance of a hold. July, a 75% chance of a hold. And I'm just looking at, what it was a month ago. It was a 23% chance of a hold here. And now it's moved up to 75% chance of a hold. Like that's basically locked in there for July. And then September, as we get out to like Q3, you had a month ago a 6.5% chance of a rate hold. Now it's 51% chance. That just tells you how much these rate odds for holds are changing. We get out to November. It used to be around 4%. Now it's around 40%. And then to end out the year, December, the market, was expecting 1% a month ago, and now it's expecting 24% chance of a rate hold, which that's a pretty good likelihood. It was expected by the time we get to December, we had already expecting 3 rate cuts, or that was the highest likely of odds. It was 3 rate cuts by December. So, yeah, the market's gonna have to do some repricing if Fed comes out and says hold throughout the year, and what if they come out and say, we think we might even do some rate hikes